Hi, everyone. Welcome to the 137th episode of the Timing Research Show for May 8th, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 189th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com and you can download this or any of the past reports there. I have Matt Buckley back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Appreciate it. Let's go ahead and get airborne, folks. We have another great roundtable here that David has assembled. We got Anka Metcalf from TradeOutLoud.com. Barry, I think, is doing some troubleshooting. Barry Burns from Top Dog Trading. Hopefully, he'll pop up. Vince Vora from Trading Winds, and Simon Klein from TradeSmartForex.com. So, folks, let's go top to bottom in that order. We'll just keep that as we go through the report and go through our questions and our back and forth. But to kick it off, and Anka, are you down here in South Florida yet?
Yes, I am.
That's awesome.
Yeah, I'm also almost your neighbor. I'm in Boca Raton, so.
Oh, that's great. Awesome. Well, we have to go to Meisner and get a glass of wine or something like that.
Sure.
So, Anka, give everybody a little bit of the executive summary about who you are, what your background is, and what you do with Trade Out Loud.
Okay, thanks so much, Matt, and thank you, everybody. Thank you, David, for having me here today. Again, on the show, I really appreciate these are great roundtables, like Matt said. So for those of you that know me, I have been a professional independent trader focused on equity and futures for the last 14 years. I also come with a background of 10 plus years in investment banking prior to becoming a professional trader. So basically, prior to taking it on my own. I also run a managed accounts program. I have been doing that for more than 10 years. And I am the founder and CEO of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest the equities and the futures market. And I'm also the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, specific price zones, chart correlation, chart synchronicity, strict set of trading rules, and a 10-point scoring system. And the reason why I'm saying that I'm the designer of the institutional proprietary trading system is because I'm not the creator. I just took the institutional model and I have adapted it for the retail trader, for the trader that is not handling millions and billions of dollars, billions of dollar accounts at a time.
Okay, awesome. Anka, Barry, did you sort out your microphone issue?
I'm not sure. Yeah, I think I did.
I did hear you, so I think you did. So, Barry,
okay.
give us that executive summary about yourself.
Great. Yeah, I switched to a different computer here and used Chrome, and okay, got it all settled out. So, so I'm the owner and founder of TopDogTrading.com. And I've been trading for 50 years. This is my 50th year anniversary of trading. And I know you can see my little picture down there, and you see that and you say, wait a minute, Barry, that's impossible. You look too young to have been trading for 50 years. Well, my dad actually was a stock trader, and he started teaching me when I was 8 years old, knee high to a grasshopper. So, I've been around the markets for 50 years. And seen a lot of things come and go, and eventually started Top Dog Trading a couple decades ago to help other traders to go through their learning curve faster than I did, hopefully. And so I primarily teach technical analysis, which is chart reading of stocks, forex, futures, commodities. And I don't teach options directly with regard to option strategies, but I do teach option traders how to read the charts of the underlying markets of the options that they're trading on. So that's my goal, and that's what I do. So primarily I trade during the day. I do day trading, and then I do my swing trading positions after the markets close. And then in the afternoon and evenings, I teach traders how to trade their own accounts.
It's awesome, man. Geez, it sounds like you need another day job there. That's great. We'll definitely be talking about the options here in a little bit. All right, Vince, good to be working with you again. Give us that executive summary and also what you do at Trading Winds.
Excellent. And first of all, thanks for having me back on, Matt, and thanks to David. Really glad to be back here with you. I can't say I can top Barry's 50 years, but I've also been doing this for a long time. I've a little over 30 years, and most of that time was spent trading professionally in the equities, the bond, and derivatives markets. Trade around the world, trade in Hong Kong, Australia, UK, across Canada and the US. And over that time, developed several strategies and trading systems that are used by several retail traders, but nowadays also several money managers and hedge funds. Left the corporate world in 2004, been on my own ever since. And about 6 years ago, we started Trading Winds. And the focus since then has been similar to Anka and Barry, to teaching. That's really my passion these days, and that's what we've been doing here for the past 6 years. We do have a pro service that we run every month. We provide nightly videos to our members where we recap the day's action in the markets, highlight any trades from several of our systems. And we also run live market chats that happen twice a week, every Monday evening and Thursday morning, where traders are able to come into our room and ask me any trading related question they like. So it's been a lot of fun, and that's our focus going forward is teaching individual traders how to do this for a living. Thanks again for having me on.
You bet. Thank you. All right, let's go ahead. I'll share this. It's sometimes easier for me to do slides. My name, folks, as David says, Matthew Buckley. You can call me Whiz going forward. My parents did like me. That's not my God-given name. I earned that as a call sign flying the F-18 Hornet for the U.S. Navy. Graduated from the Navy Fighter Weapons School, which many of you know is Top Gun, hence the big marketing department here, Top Gun Options, and flew 44 combat sorties over Iraq. I applied everything I learned flying fighters to my trading. Having a strategy, implementing tactics, debriefing, contingency planning, knowing when to get out of a bad situation before it got worse, or a good situation before it got worse, for that matter. And it worked incredibly well. Eventually, I popped up on the radar of one of the largest volatility arbitrage options firms in the actually now in the world, Peak 6 Investments. Those big tall windows there. That's the Chicago Board of Trade. That's that famous intersection between Jackson and LaSalle. And it had an absolute blast. No offense to people from Chicago, but Chicago ain't for me. I did feel a little bit like Valentine in Trading Places, going from essentially the streets to essentially running a $2.5 billion firm as the managing director of strategy. And then I was the founder and CEO of the Options News Network, ONN.TV. So we'd shoot on the floor of the CBO and the CBOT each day. And it's kind of like the CNBC for options. And then, like I said, decided Chicago winners were best left for somebody other than me, and headed down here to South Florida in Boca Raton here with Anka, where I own and operate Top Gun Options, and we've been in business for about 7 years. So having an absolute blast doing that stuff. So, all right, guys.
Hey, Matt, I think you skipped Simon there.
Oh, I'm sorry. Oh, I did skip Simon from Trade Smart Forex. Simon, sorry about that, my brother. So give us your executive summary. Sorry to drop you off the bottom of my yellow sticky here. Go ahead, Simon.
No problem. Okay, thank you again for having me on the show. I'm the CEO and founder of TradeSmartForex.com, professional trader for just over 12 years. I'm a trading coach. I'm also an author at various financial sites on the internet. I graduated university many years ago with a computer science degree and started my professional life working at Credit Suisse in both London and New York. That was in 1996. And I started my professional trading life working as an equity trader at Generic Trading in Philadelphia in 2005, after passing the Series 7, the FINRA, the Financial Industry Regulatory Authority exam. And for the past just over 2 years, it's actually been longer, but since I actually went on the internet, I was actually training people by word of mouth beforehand for maybe about 10 years. And I started TradeSmartForex.com just over 2 years ago due to people asking me to teach them how to trade. So this has kind of grown organically over the past 2 years, and more people are coming through. Now, my way of approaching the market is that it's not one size fits all. There are many people that I've actually trained that have been sat next to professional traders one-on-one for 2 years or every single day and tried to follow their trades and tried to learn, but it did not work for them because they couldn't do exactly what that trader, because it didn't fit them. So I took a step back and I thought, what's the best way to approach this? So I decided the best way to approach this is to teach people a framework to read the market, a technical framework, so they understand what the market's doing, any market, how to read the charts in a professional way, how to identify where levels of supply and demand are in the market, how to identify trends, where do they begin and where do they end, and understanding which direction the price is moving, and doing that on multiple time frames to build high probability scenarios of what's likely to happen next in the market. But that wasn't enough, just learning how to read the market. You also need to have a framework in which to operate as a trader and to grow. So I designed another part of the training, which is how to run a trading business, which will take you through exactly the framework that you need to have in place, and will help you go step by step, the process to operate through that framework, from how to actually wait for a trade, how to take a trade, how to log your trades, how to write in your trading journal to uncover how you're performing as a trader, to understand where you need to work, that sort of thing. So I found the success rate has actually gone up quite remarkably for people that have gone through this training. So this is
Awesome.
what I'm focused on doing. We're also in the process of starting a live trading room. We're actually testing it at the moment, so people can come and follow along with the trades that we're doing. Once they understand how it all works, they can come and see. And that's where we are at the moment.
Awesome, Simon. Welcome aboard. My apologies again. All right, so we'll keep that order: Anka, Barry, Vince, and Simon. So question one in the report 189 for this week. And Anka, we'll combine question 1 and 2. Which direction do you think the S&P 500 index will move from this coming Monday's open, this morning obviously, to Friday's close, higher or lower? You can see the respondents on the screen with about a 66% higher. So what's your take, higher or lower by the end of the week?
You know what?
And your confidence.
Yeah, I'm looking at the technicals, and I gotta tell you, I think this is one of the times when I'm a little leery about going long or short. So I think that the market needs to digest these highs over here. I can share the, hold on just a second. I'm gonna go ahead and share my screen. Okay, so everybody would have a chance to take a look at what I'm looking at right now. All right, so you should all see the screens right now. So the reason why I'm a little skeptical about going higher and lower is because we are literally dealing with these all-time highs right here. So I'm going to put out the daily chart. Okay, here we go. All right, so you can see that the price is trying to digest these highs, and to be very honest, I think like we have a 50-50 shot at going long or short. So 50% higher and 50% lower. We're digesting these highs that were set back on March 1st. We're having a hard time. We created a little bit higher high right here, slightly higher high, only 30 points higher, 25 points higher into this high. But again, I would say it's a 50-50 shot. It all depends on the technicals, because if we digest this high, if we consolidate bullishly throughout the day today, and so far today has been relatively low volume day, not a lot of participation. It has been sideways. It looks like the algos might have been turned off for the day. And once again, at 12 o'clock, after 12 o'clock, we got a little bit of a pop. But all in all, it's like we're trying to digest these highs. If we should expect a pullback, and I think that this is the key level, if we break below the 2390 area, we can continue lower into the 2380 area and then back into these highs here of 2370. This overall here holds the key for this week. So I think that if we break above 2401, the high that we set overnight, we may continue higher. But if we don't, we may have a chance of pulling back, but not necessarily bearish. So I'm still thinking bullish because of the overall chart pattern, but I'm looking at the technicals, and the technicals are telling me, you should stay put. You shouldn't go long right now, aggressively long, especially that when you take a look at the VIX. All right, for the first time in a very long time, it's trading below $10. Now, the last time we were here, okay, I'm going to switch to another chart, was back in Let me go back down. I think it was 2006. Here it is. Back in 2006, in December 2006, when the VIX were trading at a low of $9.39. So it's a very tough area here. We're on a lot of support into the VIX. Usually when we're trading into these lows of within the VIX, we should expect a reversal coming soon. So I'm just sitting on the sidelines. Like I said, 50-50 shot of going higher or lower. That's my bias.
50-50. Well,
50-50. Yeah, it's a toss of a coin. To me, it's a toss of a coin. So I'm not aggressively long or short positions right now. I do have a trade that I'm going to share with everybody at the end of the show that I'm looking at, and it's more like an independent trade. So it's a standalone trade. It's something unique. So it's not with the market participation, and it's out in the clear. So no earnings pending. So something that will play on the safe side. But all in all, I think that this week I'm going to play it safe. We have Apple, and we had all these big stocks that have been rallying. And if you were not an Apple, Google, Amazon, whatever big company that is within, all these big companies, then all the others are just chugging along, trying to catch along. It's been a hard trading environment, especially for stocks that are priced between, let's say, $20 and about $200. So all the high price stocks are running and rallying, like Facebook and Apple and all those stuff, and Amazon. All the others are having a hard time.
Yeah, Amazon, again, a big
Amazon, Apple, like Apple today was out of control, like another super bar higher. So Apple is one of these, look at the move today. It's literally a climactic move to the upside. So huge move, getting extended from any kind of level of support that we have here. 145.88 is the support level. So once again, these stocks are being bought, and all the others are little laggers.
Agreed. Very, very well done, Anka. Barry, what's your take by Friday's closing bell, higher or lower, and what's your confidence there?
Okay, asking me to predict Friday. What I like to do is always talk to my friends in Australia on Thursday night and ask them what's going on Friday, and that's how I predict what's going to happen the next day. So, and that works out pretty well since they're one day into the future. But not having anybody on the planet who's 5 days into the future, I have to go to the charts. So I like what Anka said, actually. Pretty much agree with everything that she said there, but let me show you my charts and my reasons for that. Let's see. Oops, we gotta, I see, I'm gonna have to move my charts over to a different monitor here. And let's see if this will work. Can you see my charts, or?
Yeah, absolutely.
Oh, you can? Okay.
Yes.
Okay, cool. And then can you see my cursor?
Absolutely.
Oh, awesome. Okay, good. This is working out well. All right, so Anka had some excellent comments there, and I actually agree with everything that she said. So for me, the big issue right now is that I've got a daily on the left, weekly in the middle, monthly on the top, and then the McClellan not a McClellan oscillator, but index that I use here with some moving averages and so forth on the bottom right. So yeah, we're definitely dealing with resistance here, as you can see. So for me, I wouldn't buy here. I don't buy into resistance, and I'm not a breakout trader. So, but to answer your question directly, what I'm looking at is all the energies other than price level, which is resistance, is bullish. So the resistance is a bearish potential. And yes, we've been going sideways here. But again, that sideways movement on the daily chart here, it's kind of actually a bit bullish in my mind, the price action. So, for example, if price action comes up and then retraces deeply, or even if it retraces shallow, then I'm not too concerned. This black line here's the 15 EMA. So if it only retraces the 15 EMA, I'm still feeling pretty bullish about it. This has been going pretty sideways. And to me, now this is my cycle indicator, and the cycle indicator has come down, put in a cycle low, and started going up. But price action has not come down. It's gone sideways. And so that combination to me is a bullish combination. So I am bullish on the market. We've got the price action is bullish here. Cycle is up. This is my momentum indicator. That is up on the daily. Going over to the weekly, momentum, cycle, moving averages all up. Even on the monthly, everything's up there. So, and then McClellan Summation Index is up, although it's been up for quite a while. So I get concerned about when something is up for too long. So I'm going to go with bullish for Friday. And, but again, I wouldn't enter here. And, my entry on this is what I call my reload pattern. So we had A, B, C, D, E pattern here, momentum going down. Well, this green line here, that's the 50 SMA. So trend up, momentum down. That's a reload pattern, one of my trades. And it also happens to be a descending triangle at the same time. So equal lows, lower highs, which is a lowering of volatility. We look for an expansion of volatility to come out of that. We got that. We gapped right back up to the resistance level, which was exactly our first level of our first profit target. So that was the trade. So that one to me was easy to call based on my methodology, and I would give that like a 90% chance. At this point to go up, I'm gonna say, as far as rating my confidence, I'll give it a 61.8% confidence rate.
Sorry about that. I was talking to myself. 61.8. That's very specific. So yeah. 61.8 to the upside.
Yeah.
That's awesome. All right, Vince. So Anka's a coin flip. Barry's up with a 61.8. Where do you land on this?
I think we're going to see some more upside into Friday. Let me try to share my screen here with you. Hopefully that pops up in the next few seconds. Hopefully you can see that. I've got a chart of the S&P futures on here. That's the one I use when I'm trying to judge the S&P. And what I see is some upward momentum here, nice bounce off this cloud recently. Now, it's been a couple of weeks of some pretty quiet sideways action. We got this break on Friday. And what I'm really looking at is a break of this high. So that high is 23.98 here on the futures chart. And I think if we can break above that, I think we close the week off higher. We do have upward momentum. And by upward momentum, I use the 20-period simple moving average, and I'm looking for a slope into the direction of my trade. Confirming with higher time frames, we see that on the weekly. We also see that on the monthly, here turning higher now. And if we go down to an hourly chart, look at today's action. We were pulling back most of the morning, and now, as of the 11 a.m. Bar here, and the last couple of hours, we've turned around and started to move higher. So I think if we can get above that 23.98 level on the futures chart, we've got about 4 or 5 points to go here this afternoon. I think we finish the week off to the positive side. And percentage-wise, confidence level, I'd say I'm about 70% confident. A little longer term, not convinced at this point. To what Anka was saying about being right back at these highs, it is a little concerning right now. I think as long as we can get above there and remain above there, we'll be okay. But if we have time later on in the show, I'll let you know why I have other concerns. But at this point, yeah, I'm calling for a 70% chance we finish higher on Friday.
All right, Vince, I like it. That sounds good. All right, Simon, we have 2 higher. We got a 50-50. Where do you land for this week, higher or lower? And what's your probability?
Okay, can you see my charts?
1 second.
Yes, I can see them.
Yep.
Oh, you can see them. Okay, so let's go through the reasoning and then I'll say what I think.
Okay.
If we look from the monthly chart down, you can look at the monthly chart. We can see this is a monthly, weekly, and daily. So I'm looking at these 3 time frames to get a bigger picture of what's likely to happen. We can see we are at the highs, and we actually gapped up this morning. We gapped up and sold off. We can also, this looks very, very bullish. We're kind of uptrending here on the monthly chart. Yeah, we could say we actually, if the next month closes here, we could say we're actually moving sideways. If we look at the weekly time frame, just make this quicker and bigger, we were actually setting up for a pullback here, but what happened? We put in a higher low and moved to make a new highs here, which is bullish. So we're in new high territory. We actually just hit new highs today on the gap open this morning. We gapped over the supply after basing around here. Basing in supply is generally bullish, and you can see we pushed up and closed above this supply zone, this kind of base, and then gapped up. So there's probably some profit taking here. People that were in, earlier on, if it gaps up, people are going to be taking profits. So the question is this: are we gonna? The daily bar is actually red at the moment, and obviously the weekly bar as well. But we're still bullish on the month. So I would say very similar to Anka. It's kind of 50-50. We could actually retrace a bit more, but we're still bullish on the monthly and weekly chart, and we're still bullish on the daily chart, besides the fact that we just gapped up and pulled back. And it looks like we're holding over here. If we look down on the hourly chart here, we're holding. So if we hold this level, we could push up again. If we hold above this demand level that was once supply, we could push to new highs. Alternatively, we could continue moving down and then go sideways. So again, it's kind of 50-50. I'd say the bigger timeframes are still bullish, so go in the direction of the bigger timeframes when in doubt. So the weekly and monthly are still bullish. But that doesn't mean that we're not going to pull back a little bit. So I would say 50-50.
Wow. Okay, so we got two 50-50s, a 61.8 and a 70. Well, the best part about being the host and going last is to be able to say you're all wrong. Since I'm batting cleanup, right? No. So I agree with everything we just said. We're going to get into more of the details about why you specifically are 50 delta or the 0.6, 0.7. I am looking, I am with a 71% delta of lower. And well, you know what? 70, I'll keep this on timeline here. 71% lower by Friday from today. So Anka, let's start with you at the top of the order, because question 3 actually leads into that, which is what specifically is giving you your 50-50. I know you sprinkled some of that in there, but take this opportunity and Barry, Vince, and Simon to do the same thing. A little bit more color and clarity as to why you came up with which direction you're heading there.
Well, I was looking at the charts, and just like Simon and Barry said, and even Vince, we are looking specifically at technicals. We don't have a lot of economic releases this week, other than some overnight news that we're going to be getting from Australia. Some of them are going to come from Europe. We have the ECB President Draghi that is going to speak later this week. So there are a lot of things that are going on right now. Mostly they're happening overnight. And if you look back at the charts, and I'm looking at some hourly charts, and actually perform an analysis throughout this weekend, and I looked at hourly charts, and as well I look at the futures market. All the rallies have happened overnight. So we have had very choppy very choppy New York trading sessions, because the moves already occur in the overnight, and that was with a lack of direction. I mean, we're in a bullish environment, and we do have the direction, but we did not get a real move on FOMC. We did not get, the way we're used to getting a big spike, whether to the upside or the downside. So the market is looking for a reason now to continue higher and to base. And it doesn't have that catalyst to push it higher so far, and it doesn't have the catalyst as well to make it pull back. Obviously, we're trading in a very news-driven environment. more than 2013 when basically I've noticed that the news are taking over chart patterns, and when we're looking at our charts at SPX, even the futures in ES, the markets are really extended, and they're really extended from any kind of support level right now. All we're looking at as technicals are projections, and we're running these projections, and so far these projections are being met. So any small pullback, in fact, this is something that I tell my traders and also my swing traders, and also day traders, we have to trade in the direction of the trend. We are going to trade bullishly because this is the environment that we're in. And even if the S&P is going to pull back to the 2380 area, even to the 2360, or even to the 2340, guess what? We're still in a bullish environment, and that's just a pullback in a larger time frame. So the big picture is still bullish. We don't have any reasoning so far to think otherwise. And moving forward into the end of the week, I think that, choppiness is going to be the name of the game for day traders. Like I said before, if you're not day trading or doing options in Apple or Amazon or etc., you don't have a lot to play with. I have my scanner running up. There are very little things that are popping on the scanner. One of the things that make me neutral, that's the reason why I have the 50-50 shot, is because financials are not participating in this rally. They're not participating at some of the way some of the technicals are. Today we had earnings from NVIDIA. NVIDIA did not, NVIDIA looks at that point where it can literally turn around, but more about that, when we're gonna talk about, a trade idea. But all in all, I think that, and as a technical trader, I look at the VIX, I look at the market where it is, it's super extended. And I think, I should apply caution.
I think that's a great word to apply for a market this high, with the VIX low, with low VIX, low volume. It is May, sell in May, go away, all those Wall Street isms. It's a very precarious position. There's a lot of uber hedge fund and money managers are out there that if somebody dumped $1 billion in their lap and said, hey, deploy this, they'd throw it right back at them. Matter of fact, I know a lot of hedge funds that are actually returning capital to people because they're like, we're not going to put this to work up here. And you're right, Anka, unless you are in getting a bottle rocket ride in some of the fangs, and even those are going to fizzle out. You just can't go up forever. So I think your last word there, caution, is very appropriate. So Barry, what other strategery events for the week gives us your 61.8 higher? What's on your radar specifically for the week?
Okay, so let's see here. I want to make sure you can see my charts. Yeah, it looks like you can. Okay, good. So so I mentioned before, I'll just reiterate real quickly and then show you something new here. So we have definitely been in what would be typically concerned an extended market to the upside statistically. So I'll tell you, I looked for some shorts. I actually did take a couple of short positions that didn't work out. And, it may go away kind of thing. Looking at that right now as well, keeping that in mind, of course. That has statistically worked out, but nothing's 100%. But right now, all I can do, I trade bar by bar. That's one of my slogans. I didn't make that up, but that's one of the slogans I live by, is trading bar by bar. And right now, at this moment, today, everything is up on the daily, everything is up on the weekly, everything's up on the monthly. We do have the resistance, but to me, this is still a bullish pattern here on the daily. Now, the new thing that I'll share that I didn't share before is over here. I mentioned it, but I'll show you this more in detail here. So this is the McClellan Summation Index with the moving average on it here. And so I did take a short position, and just to show you that, hey, I don't mind telling people when I don't make the right decision, but I don't think it was really the wrong decision, because to me, it was a high probability trade. So that is always a right decision. Just because it didn't work out doesn't mean it wasn't right to do it. Not all high probability trades work out. If they did, then they'd be certainties and not probabilities. But I took a short here because we were 7 waves up. These are Barry waves, not Elliott waves. So Barry waves can make as many waves as they feel like. And they're basically higher highs with a few other caveats. But anyway, so 7 wave is extended. And so we retested this high. And of course, we've already been extended, for years here. And then this dramatic move down on the McClellan Summation Index to me was very, very bearish. And we got down to the 50 MA, and I actually took partial profits there. And that's just part of good money management, not knowing the future. I said, okay, I'm going to take some partial profits there. And then I was watching, I didn't want it to break above the 15 EMA, and it didn't. It held it. And then it came back down. I was looking for it to get down to the 100 MA, which is here. And didn't do that. It found this low here as support. And then, of course, the summation index reversed. So then I'm like, okay, well, we're just going to do a stop and reverse there. So just took minor profits there, a little bit of money, but a little bit of money is better than none. When I trained under a floor trader at the CME, and he used to say that a scratch is a win, and that's a little more than a scratch. But anyway, I was there in case it worked. It didn't. And stop and reverse, go up, and then the first target was this high, so take some profits there. And now we'll see if it continues to run. But one of my basic premises is to get in early in a new trend. Well, this is a McClellan Summation Index trend. So it's not always the same as price trend. And so that's why I use it. It's correlated, but not a perfectly correlated indicator. And of course, why use a perfectly correlated indicator when you can just look at price? So we're always looking for things that give us a little different view of the market and so forth. But right now, anyway, just to answer your question, it is still up. So earlier is better. This would be the first cycle low in it. We're at the next cycle low in it. So the longer this goes on, the less likely it is to continue. But it's up. And so that would be the other thing that I would say is encouraging me to the upside is looking at this. And this is a formula equation that crunches the advanced decline issues, for those who don't know.
Okay, awesome. Very good explanation. So Vince, with your 70, what specifically is on your radar?
Well, first I do want to say that I don't normally, try to predict a week out. I'm usually looking a lot longer term, and longer term I do see a pullback, and a fairly significant one. But looking at it closely here, just for this week, one of the main reasons why I'm saying more upside is I'm looking at this recent action here as a bit of a channel that we broke out of on Friday. And what I was looking for is follow through, as I mentioned earlier. So a trade above Friday's highs here, I think we would get us above this high. Now, if we can't get above that level, then a double top here is a very good probability of that happening, and that would totally change my opinion. But because we have a momentum up here at this point, I think we can get through that, especially looking at today's hourly chart. I think we can break above that and follow through. I think this market has one more move to the upside, not a significant one, but I think we could get another leg higher here before we roll over. The other thing is we're at all-time highs. Obviously, there's no resistance overhead, and I've looked at a number of charts recently. They're in exactly the same position. So there's a number of securities out there, even in addition to the FANG stocks that are at all-time highs and really don't have much resistance. Now, looking at a little longer term here, I'll zoom out a little. And one of the things that caught my attention, or has had my attention for a while, is potential divergence. And I'm going to use the MACD here, just a regular default setting 12/26/9 MACD histogram. And if we look at this previous peak here on the daily chart to where we are now, looking on the daily, there really isn't any divergence. If anything, it's positive divergence. But if we go over to the weekly and the monthly, let me clear off these lines for a second. Going back to this peak back in April to where we are now. I mean, there's fairly significant negative divergence here, any way you want to draw it. And you know, if we clear that off and look at the monthly, it's even more dramatic. And so I think at some point, going right even back to here, coming in, I mean, the divergence is clear. And I think, you know, although we are at all-time highs, no resistance up ahead, and do at this point have momentum, which is why I think we can get another leg higher. I don't think it's going to be a significant one. And I do think at that point we will pull back significantly, and which is also why if we cannot clear these highs here, and this ends up being a double top, I think.
Can you see your chart? I'm not seeing your chart, Vince. Are you trying to project there?
Oh, geez, I'm sorry. I thought
Might have been just me. I was double checking. I was clicking around, looking at all my settings.
Oh, sorry. There it is. Okay. My mistake.
No worries.
So quickly, again, let me just quickly go to the weekly and the monthly just to show you what I was looking at as far as divergence goes. You know, going back to last April here to now, looking on the weekly, there's significant divergence here, negative divergence. You don't really see that on the daily right now, which is, again, one of the reasons why I think we can get another leg higher. Monthly here, it's even more dramatic, going way back here to April of 2011 or so. And you can see there's you know, a big difference there. So I think we will have a significant pullback, but because I'm looking at this recent action in here as a bit of a channel that we broke above on Friday. If we can get follow through above Friday's high, I think we can get another leg higher. But if we cannot break above these highs on the futures chart here, and this ends up being a double top, then I think it's going to be that pullback is going to happen sooner than later. But I still think we can bump above here and close higher by Friday.
Okay, and Simon, what's on your radar for the week with your 50-50 that you mentioned?
Okay, so again, if you're in a trend, there's only two reasons why the market, we're in an uptrend at the moment on the this is the E-mini futures, the S&P 500 futures. And there's only one reason to sell in an uptrend. Yeah, either the trend's coming to an end, and as a number of people said before, we're at all-time highs here. There's no overhead supply or resistance, so to say. Unless there could be institutions with set orders sitting above the market, that could be the case. So generally, there's two different sorts of moving down the market can do. There's a pullback, and that's a move down to go higher. And generally, if you're in a trend and you're trading with the trend, you want to wait for a pullback, just like here, for example, to a known level of demand and then engage the market. So you could have actually entered like now, around now, into this trend if this is going to continue higher. Now, again, you can trade in such a way that it doesn't really matter what the market actually does, because if this is going to go higher, or even if it's going to go lower, it will go higher up to some level first. And if there's enough reward to risk to take the trade, you can actually take the trade whether the market continues going higher or not, or you can lock in profit, manage your risk, and do all sorts of things like that. So you don't really need to know where the market is going to go or what the market is going to do to actually make money trading. What you need to do is know what you're going to do if the market shows you your edge, where the probability is in your favor and the reward to risk. So that being said, the other reason why a market could go down is it's a start of a move down, as in every move up would be sold afterwards, and we might be beginning the starting of a downtrend. As opposed to, it's not just a pullback like this. It's a pullback to go higher, pullback to go higher, pullback to go higher.
Yeah, it's I don't think we're seeing your chart either.
You're not. I shared it. 1 second.
The green arrow button there.
Okay, I actually have
it mentally, but
I'm sharing again. Do you see it?
There it is. Yes, I got it. No, you know what? You were sharing it. I had the wrong screen up. That was perfect. No, that's my fault.
Apologies. Right. So again, there's times to engage the market. Like now, if you think the market's going to move to new time highs, again, the monthly chart could be, if we go above these highs, at this month closes green and above, then we could carry on. We could get we can project this move from here to here and then project it up where the market may likely go next. If we close above this bar over here, this red bar, by the end of this month, we could see continuation of the move up to the upside. So for the time being, again, the market hasn't shot up to the upside and gone climactic, whereby that may put in a top, like an exhaustive move to the upside. We've been consolidating for quite a number of weeks here. And now we move to new highs. So from that perspective, it may continue moving higher. There's no one who's rushing to get out of the market saying, oh, this is the high. We did get a gap above, which people may have sold into. As you can see, they did. There was more supply than demand up here, and the market did come down. But it may continue higher after those sellers are out of the picture. So again, it's still very bullish, but with caution. So that's why the 50-50, because we're at all-time highs. Again, how many markets have we seen at all-time highs that keep going?
Exactly.
And from my experience, yeah, when you think, I used to try and pick tops and try and short, and used to, in my early days, I used to try and pick tops and bottoms, and it wasn't very good at the beginning. Yeah. So from my experience has shown me that the markets, when you think it's a top, it could go on more and more and more. People think it's a top and start selling, the market's going to push higher and knock them out, and that's generally not the weak hands out. So that's one reason why it could go. If you think it's a top and everyone else thinks it's a top, and people, then it may push higher.
I love it. One of those Wall Street isms is the market can remain irrational longer than you can stay solvent. So sometimes trying to pick a top it really is a fool's errand. I for a while there, when the Fed was just doing their QE, and I called it the hopium. You just got to smoke the hopium and trade the market higher. But both you and Anka both use a very appropriate word right now, which is caution. So when I look at my radar for the week, let me bring up some. I
can actually show you a trade I'm in at the moment. I'm in the dollar yen on the short side. It's not the market, but it's and for some people, let me just show you an idea. This is moving up. If we look on the daily chart here, you can see the daily chart. I'm seeing your screen. Are you watching? You can see this.
I can see yours.
So you can see. So I took a trade today over here. I entered the trade over here. Yeah, I can actually show you the trade if you want, but I'm still live in it. So I entered the trade over here, much similar. There's a pullback, and the direction changed here to the upside, and we're moving up. Now we're hitting some supply here, but we've still got room to move from this. We closed above this whole kind of supply level. So and we've moved back down and bounced up. We actually gapped up here and pulled back, and I bought here. So the market could go down, but it's still, it's starting to look bullish here. So I'm looking for a move up into this area over here. You can see we've actually gone above these highs. So this is an idea of how to get into a market, even if I think it's going to go. Some people would look at this formation and say, oh, it's a top, it's going to go down. So a red bar here. And it starts to sell off. It gaps up and sells off. So I bought this. So again, even if I'm wrong, I can still get out, and I'm nicely in the profit at the moment. And so that's the idea. So you don't really need to know what the market is going to do to make money trading, which is what people want to do.
Correct.
You can predict the market. There's many good analysts out there that can predict the market, but can they make money from it? That's the question.
Okay, awesome. So I appreciate it. I'm a lower for the week, and I'll show you the one trade I have on right now. I sent out a weekly options trading SPX, a bear call spread. So 15 contracts. Let me just pull this up right here. So selling the 15 of the May, this Friday's 2410 calls and the 2015 calls. It's a bear call spread. That's why I said 70%. Using current at the money volatility, there's a 71% probability of at least breaking even. Couple reasons. Throughout the week, we're actually going to get some retail earnings. And based on that, just awful Q1 GDP print last Friday, I just don't. I don't see the retailers lighting it on fire. And then on Friday, we also we get some inflation numbers and stuff like that. And Anka also said, who was it, Mario speaking sometime during the week. But we also get retail sales Friday morning. Whenever we see these Monday, Tuesdays that are either rip your face off rally or kind of flat, we're really tending to the market does. First of all, 2,400 it's acting like a magnet, and it really is resistance. It's kind of a ceiling here. When I look into the white space of this chart, the risk to me is to the downside. I call this the hope and change rally, and not a tongue-in-cheek to Obama. This rally is all on hope. Hope that Trump would get done what he said he'd get done: tax reform, healthcare repeal, regulation, infrastructure spending. All of that has been an absolute train wreck. Third time was the charm for Congress and healthcare, and the Senate just said, we're not even going to look at theirs. We're starting from scratch. So the risks to the downside, to me, far outweigh any upside here. I mean, every time the guy said, hey, next week, huge announcement on tax reform. And then next week came and it was kind of nothing or little details from his Treasury Secretary. The risks out here to the right side of the chart, we still haven't talked about macro events. Folks, you could wake up tomorrow and the futures are down 1,000 points because, there's 4 million people dead in North Korea. That thing isn't over yet. And neither one of them is going to back down, whether it's Trump or Kim. A lot of macro events out there. We got Russia, we got Syria, we got Iran, we have oil. Oil's another thing we haven't really talked about. Oil, 45. Does everybody remember, was it last January and February when oil plunged through, what did we hit, a 29 handle, 26 handle? Get ready for oil to rear its ugly head here and start impacting the market here. So I'm a down guy for the week tactically. And again, we're just talking about this week. I have a tactical weekly options trade on. Very, very tactical trade. But, obviously the longer term trend, I think like a lot of you guys said, it's obviously up here. God forbid we have one of those horrible macro events. But, tactically for this week, the markets don't like going into the weekend long because of what potentially could happen over the weekend, from nuclear war to a couple stupid tweets to God knows what can happen. So for a whole host of reasons, I'm bearish on the week. And like I said, with a 70% probability using at the money vol that we're lower. Okay. We have 4 minutes left, but we can kind of do a quick lightning round here. Anka, I know you said you had a trade on deck ready because I like to grab some trades out of you guys. So Anka, Barry, Vince, and Simon, let's do a ripple quick. Hey, here's a trade that I like right now, and here's a trade that I would look to put on or I have on. So Anka, we'll throw it to you.
All right, so the trade that I'm looking at, and I'm just going to share the screen. All right, here it is. And I like Honeywell long, and this is going to put the early chart here. This is going to be a breakout trade that I'm looking at. So here it is, popping, gapping up to 135, pulling back into a minor support area right here at 130.50. Now 130.50 area is going to be the line in the sand. If it remains above this area, and actually there's a lower pivot here at 130. So I'm going to place a stop below 130, and I'm going to look for a trade for a breakout over 131.50. This is going to be my trade of the week. And I'm going to look for a continuation all the way into the 135. So I'm going to be trailing it along the way. I see a target into 135. 135 is also an all-time high for Honeywell. So it's a pretty good risk to reward ratio here. So I'm going to give it a shot. With the market grinding the way it is grinding right now, and if it's holding, this might be a unique play. It's something that is not participating right now. It's not one of those Apples or Googles that is on the run right now. It's just taking its time to digest this support level at 130 level. It's looking really strong right now, and I think that a pop over this resistance area has the potential to propel the price higher into this prior high of 135. And also, one other trade that I have mentioned earlier is NVIDIA. Now, NVIDIA will report earnings tomorrow after the market closes, and the way it is setting right now is setting a little bit bearishly. Now, I know that that's not a great indication because anything can happen at earnings, but if this scenario is going to be present throughout earnings tomorrow. This can be a good potential breakdown on the weekly chart. So you can see the weekly chart right here. It's a little smaller. So the weekly is pointing lower, and I think we can have room to continue lower into the 95.50 area. We're having descending tops right here. We're forming a bearish pennant at this point. NVIDIA had a climactic run all through 2016, and I'm moving to the far right-hand side on the monthly chart. Tremendous rally last year, and this year it has been basing pretty much for the whole year, setting support at 95 and resistance back into this all-time high at 120.92. So this is going to be the play. If it happens to break above, then yeah, we can see more upside. But so far, these time frames, we're having lower highs. We're having solid support area here at 95. So this might be a swing into the $95 area. These are my 2 picks for the week.
Very good. We get a twofer for your picks for the week. All right, Barry, what's a good trade you're looking at right now, or one that you have on?
Okay, thank you, Whiz. I got to tell you, I really appreciated your comments there. You know, we've been talking a lot about technical analysis, and you brought some more, economic fundamental view to the picture here, which I think is very important. There's an old saying that news trumps technicals. And I truly believe that. And kind of funny that there's actually a pun in there that news trumps technicals.
I got that. I see what you did there.
Yeah, pretty good, huh? What a world we live in, where you have to worry whether, oh my gosh, we could either have nuclear war, and that could dramatically affect the market, or we could have a tweet, and that could dramatically affect the market.
Exactly.
So, yeah, it's crazy. But anyway, that aside, I just thought that was really great. So what I'm going to do is, several people have mentioned about how we're at all-time highs, there's no resistance overhead and so forth. And that, yes, that's true. But rather than give a new trade setup, if people are long, I wanted to follow through on that comment and just give a quick way for people to maybe find some resistance overhead if they are already long. So I just go over here to Fibonacci tools, price extension lines. This is a 3-point drawing tool. So you could draw it from this low to that high, if I can mark it real quickly. And we're behind time, so I'm going to try to do this quickly. Anyway, this is one technique to find resistance levels above where price hasn't been before, and there's no price resistance as such. So obviously based on Fibonacci, and these are potential levels that you would then look at for confluence of time and price, as W.D. Gann would say. So I'm not a huge Gann fan, but he does have some really good stuff. And confluence of time and price is one of the things that I do look for. So these resistance levels above are one way, using the Fibonacci extension tool, of finding potential levels to look for the confluence of a cycle high, or maybe momentum shifting at one of these levels. And so this is one way that I look for resistance where we don't have a previous price history to create that for us. One other thing I can show you is I was looking at the dividends ETFs. Let's see if I can find them here real quick. And come on, do this for me. Be nice. There we go. Okay, yes. So here we go. It's way down here somewhere. There it is. So yeah, this is one where a little different pattern. Yeah, it's I don't know if I would say this is a fantastic trade, but it's an opportunity that people could look at if they wanted to. We've got a lower high here, and if people are starting to get concerned about the markets, sometimes they'll move their finances over into dividends and look for income. With interest rates being so low, that's been hard to come by, but there are some stocks that do pay pretty high dividends, but the higher the dividend, general correlation, the higher the risk as well. So anyway, just something to look at. It's a little different than the S&P, showing a little different pattern here. Not necessarily recommending it as a trade, but just for something that people could look at if they wanted to.
Awesome. Well done, Barry. Appreciate it. Vince, what are you looking at?
Actually, Matt, it's one of the things you raised earlier, which was oil. I was glad you did. I think we're going lower on oil, and I think a bit of upside from Friday and today could kick off a bit of a retracement that'll give us an opportunity to get back in on the short side for oil. I think the past year really has been nothing more than what we can call a channel here, or at least a range for oil. And I think that $40 mark is absolutely crucial. If we break below this cloud here, if we get back below that 40 level, I think we retest 26. So longer term, I think it's going to be a much more dramatic move lower. We're here testing this 20 right now. The RSI is already dipped below 50. For me, that's a negative sign. I think we go lower and hoping for some sort of bounce this week, giving us an opportunity to get in short at a better price. But I'm liking oil to the short side.
Sorry, I was on mute. Yeah, I agree with that, Vince. Bearish on oil, and that's not going to be good for this market. All right, Simon, how about you? Bat and cleanup.
Okay, I'm going to share my screen again. So I'm going to show you a trade. I showed it before that I'm in, but this is actually a picture of the entry of the trade. You can see this is on the yen, the dollar yen, and here's the entry, stop, and we're looking for a target up here. So you can go back and actually see this is what it's done. That was the entry. So this is a trade I'm in at the moment. I may close it out soon. We're hitting some supply here, but I would like it to continue moving to the upside. So at the moment, that's what I'm in. And trade idea going forward, if we look at the Australian dollar over here, I like this monthly chart. It's basing here, but notice how many times we've been at the top of the base here. So what I'm looking for in the next coming months, maybe, this is more of a swing trade idea. If we can hold this middle of the base and turn around, then we're highly likely to break above this base and we may get a nice movement to the upside. Again, that may not happen. We may just continue to the bottom of the base, but we've been here so many times, so we're weakening this area. If we're able to hold here, you can see we're actually holding this area now. To see how, if we can hold it, we may get a move to the upside. At the moment, the market's just going sideways today. So that's another idea going forward into the future, just to keep an eye on this. Again, if this doesn't happen, then we may very well just continue going lower to the bottom of this base. So there's two ideas, one trade that I'm in and one idea looking forward.
Awesome. And real quick to back clean up, since we're just going over a little bit, like I said, I have a couple bear call spreads, S&P 500 out to the regular May expiration here. I put this on, was it Friday? Friday I put this on. Bear call spread to the regular May expiration of 2410, 2415. Risking $5,000 to potentially make 2,500 using at the money vol. That's about a 50 to 60% probability of at least max profit or breaking even. So I'm agreeing with Vince that I'm bearish on oil. Bearish on oil, folks, is going to hit the markets. You guys remember the market only cares about something when it cares. We don't care about oil until we care about oil, and then all of a sudden it's in our face and it's too late. I mean, the oil companies care about it right now. And I think you said earlier that the financials aren't taking part in this up here at Mount Everest type of hypoxic rally. It's kind of the fangs and the tech heavy NASDAQ keeping us up here. Your JP Morgans, your Goldman Sachs, all those guys aren't really doing anything. And like I said, with the weak GDP, I think the retail, a lot of the retailers are going to report this week. I think it's going to be soft. So I just like some short-term tactical bear trades, and that's all she wrote. So, all right, Anka, let's go ahead and wrap up. Why don't you tell everybody how they can get a hold of you and check everything out at TradingOutloud.com, and we'll go top to bottom.
Okay, so thanks to everybody for sticking around to the end of the show. And if you want to reach me, please visit my website. It is tradeoutloud.com. We also offer a swing trading service for equities. We offer day trading service and swing trading service for futures trading. And also we have an upcoming class. It is on May 22nd. We teach you exactly how to identify laser sharp entries, stops, targets. We teach you how to project targets beyond all-time highs and how to calculate precise risk to reward, and more about it. You can read it on our website. It is tradeoutloud.com/futures. The class is upcoming May 22nd. It is a 6-day class. You're going to spend with me 30 days live trading with me, and also the class is super, super intensive, and it is comprehensive to say the least. And you can use this class to apply to your day trading in equities or futures or Forex, whatever your instrument of desire. So thanks so much for having me on the show, David and Matt. You've been a great host.
Thank you.
And thank you, everybody. And there's always a lot to learn from all the speakers on this show. So thanks for having me, and have a wonderful and profitable trading week.
There you go. Thanks, Anka. Barry, how do we get a hold of you with Top Dog Trading?
All right, so yeah, I would just invite people to go to topdogtrading.com, and I've got a lot of articles there, a lot of blog posts. They're all very educational. I usually have a video on there with an article that relates to the video, so a lot of free education. And then also I give away a free trading course there. So once you get to the homepage on the right side, there's a big, really obnoxiously bright yellow box, and you just fill in the form there, and you can get one of my mini courses absolutely free. And the topic of that mini course is how professionals trade differently than amateurs, and kind of test drive Top Dog Trading. We let people test drive it, and we don't really sell, we educate into our courses. And so you do that. And then also tomorrow, and then also on Saturday, I'm doing 2 special free webinars where I'm sharing with people my cycle indicator about how to time your entries with precision, and just giving away that indicator. It's absolutely free, along with a 45-minute tutorial on how to use it. So we've got that coming up tomorrow. That's Tuesday, May 9th, and also an encore presentation Saturday the 13th. Both are live. And if someone's watching this later, I do those webinars periodically. So if you sign up for the free course, then you get an invitation to the webinar. So anyway, thank you very much for having me here today. I enjoyed it. I enjoyed the comments of everybody here, all of our guests. And Whiz, thank you. You did a great job as a moderator. Really appreciate you.
Thanks, Barry. I appreciate it, and thanks for all the good words as well. All right, Vince.
Thanks again. You can get a hold of us by going to our website, tradingwins.com. From there, you'll see a green label, Start Your Trial Now. We do offer a 14-day trial for $7. For today's event, anyone who decides to take that trial, will extend it. We'll give you a full 30 days. And if you take advantage of that now, you can certainly join us for our next live market chat, which is this evening, 8 p.m. Eastern, 5 p.m. Pacific. If you are, signed up and would like to join us this evening, after you sign up, just send us an email. Send it to info@tradingwins.com, and we'll get you that link for the chat this evening as quick as possible. It's going to be another great hour. We have a great group of members. We all help each other, and it's I think you'll really enjoy it. So again, tradingwins.com, and if you want to email me anytime, you can reach me at info@tradingwins.com. Thanks again, Matt. You were great, and thanks to David for having me back on. Hopefully we can do it again soon. Thanks.
You bet, Vince. Look forward to working with you again. So, Simon, over to you, my friend. How can we get a hold of you?
Okay, I'm going to share my screen again. You can hear me and you can see my screen.
Mm-hmm.
So you can go over to tradesmartforex.com. You can write me an email to simon@tradesmartforex.com. If you go to the website here, just put in your name and your email address, and you can sign up for a free webinar. And you can be on my mailing list to be notified. I put out a video once a week about where the dollar's going next. And it's on my YouTube channel as well, which you can subscribe to. And you can see where the odds of where the dollar's likely to go next. It's pretty spot on almost every single week. You can go and watch it the back weeks and go and see what the market did the following week. Almost exactly what we said. Again, it's conditional thinking. We say it's going to do either this or this, and one of those things that happens. What's happening here?
Oh, that's my screen. Sorry.
So now coming up this week on Wednesday, you should go to here on my site. You can click on here. I'm doing an investor inspiration. With Investor Inspiration, there's a whole lineup, and I'm going to be talking over here about how to become a successful trader with any size account. So again, that's people always ask, how much money do you need to become a successful trader? Again, you don't need so much. Come to that webinar and you'll learn how much money you really need. People think about it the wrong way. They think about how much money they need first before considering whether they can trade successfully first. So again, it goes the other way around. First of all, learn how to trade successfully, and then you can ask yourself, what size account do I need to make the type of money? Again, before you're a successful trader, that's the wrong question to ask. So come and you'll learn all about that. So that's what's happening this week.
Awesome, Simon. Thanks, and thanks for all
your... Thank you very much, both of you. Thank you, David, and thank you, Matt.
Awesome. Whoops, now we're going back in time again. Real easy for me, guys. You can head to TopGunOptions.com. It's pretty easy to remember. If you like the weekly options that I was talking about, you can take a 2-week test flight by clicking on Advanced. I just use the ski slope system, beginner, intermediate, advanced. It's not like weekly options are advanced. They're just a lot more tactical. Instead of trading an options, a bear call spread a month out, it's a week out. So it's a little more tactical. But we do a live trade brief every Monday, actually during this time, but I moved it because of this brief. Intermediate is kind of our front month hedges and also some of the back months. And then the beginner is our accelerated retirement options trading. So you can take a 2-week test flight into any one of these verticals just by going to TopGunOptions.com. All right, David, sorry we went over a little bit. I'm going to throw it back to you. Thanks again for having me. And thanks again for getting a great roundtable of professionals together.
Yeah, no problem on going over. It was a great show. So thanks, everyone. Just a reminder to everyone watching, be sure to hit the YouTube subscribe button to get notifications on future shows. Also, you can go to TimingResearch.com to view any of the past shows, including the archive for this one in a few minutes, and as well as download any of the past reports there. Be sure to join us next week on May 15th. Larry Gaines, Michael Filigera, Neil Batho, and Dean Jenkins will be on. And just want to thank my guests again for this week. Anka Metcalf of TradeOutLoud.com, Barry Burns of TopDogTrading.com, Vince Vora of TradingWins.com, Simon Klein of TradeSmartForex.com, and Matt Buckley of TopGunOptions.com. Thanks, everyone.
Thanks, David.
Thank you.